Good evening, everyone. We warmly welcome you all to our channel, Tax Talk. Nearly after 4 months break, the 12th live session and the very first live talk of this year is ready to be started with recently proposed surcharge tax. As usual, the resource person, Mr. Atula Ranavira, the managing partner of Ranavira Associate, is with us to continue today's discussion. Welcome, Mr. Ranavira.
Okay, thank you.
Let's start the discussion with a brief introduction of the surcharge tax.
Okay, yeah. Now these days, this is a hot topic. A lot of people are discussing about the surcharge tax. The main reason may be the rate of 25%, fairly big, high rate. Now, as proposed in the government budget 2022, which read in November 2021, they propose to introduce a one-time surcharge tax of 25%. This is for one time. They say this as mentioned as one-time tax. Now, accordingly, they recently they published the surcharge tax bill they gazetted the bill, and now it is discussing in the parliament.
Okay, then we'll move to the most important part of the bill, that is the charging section. So here the question is, who is liable, on what, and at what rate? Over to you, Mr.
Yeah. Now, okay. Now in this presentation, the first of all, when we are discussing about tax law, the most important thing is the charging section. Like in most of the other tax laws in Sri Lanka, even in this case, the charging section is section number 2. Section number 2 of the surcharge tax bill, it reads as follows. This is a small summary which I have given in this slide. This is applicable to any individual, partnership, or company whose taxable income exceed 2 billion for the year of assessment 2021. That means there are three types of persons: individuals, partnerships, and company. Then the limitation is, it says, whose taxable income exceeds rupees 2 billion, 2000 million. Then for the year of assessment 2020-21, that is a past year of assessment. They have quoted the past year of assessment, 2 billion. Then it says the tax rate. The rate of tax is 25% on the taxable income. Now, what is this taxable income? That is the taxable income as per the Inland Revenue Act. Taxable income as per the Inland Revenue Act. Suppose the taxable income for the year of assessment 2021 under the Inland Revenue Act is more than 2000 billion, 2000 million, that is 2 billion, then that taxable income is liable to a surcharge tax of 25% of that. Now here, the tax is charging not only on the excess but also on the entire amount. Suppose somebody receive 2 billion and 1 rupee, he has to pay 25% of 2 billion and 1 rupee, that is 500 million. Suppose somebody receive 1 rupee lesser than 2 billion, he need not to pay it, or he or it need not to pay. Then now, in most of the other taxes, when they introduce that type of limitations, they have introduced marginal tax reliefs. Normally, what should be is that suppose it is 2 billion and we'll say 2001 million, then the tax, the reasonable amount should be only 1 million, because after paying tax, the leftover should not be less than 2 billion. That should be a fair arrangement, but that hasn't, that system is not proposed in this law. Then, when you are supposed to pay the tax, that is also given in this section, the tax payable type. That is, payment to be made, payment to be made on two installments, equal installment. The first installment by 31st March 2022, and the second installment 30th June 2022. Then two equal installments. Now see, this 25% of the taxable income is a huge amount. Now that huge amount to be settled within 4.5 months of this law. Still the law is also not passed. First installment 50% by 31st March, that is by end of next month. The second installment after another 3 months of that. Then they have not thought about the liquidity situation of these taxpayers. It is not fair. Then we have to see, because it says company. When it says company, we should know what what are the entities covering by the term, with the term company. Company means a corporation, unincorporated association, or other body of persons. Corporation, unincorporated association, or other body of person. This is as per the Inland Revenue Act. Because this surcharge tax bill says to follow Inland Revenue Act for this definition. That means ultimately, even it is not an incorporated company, it is liable to this tax if it is meeting this 2 billion minimum amount. Then next, what we have to see is the when we are paying these taxes, whether there are any other limitations. Now, sometimes, now this, as this is for a past year of assessment, by now this company may be under liquidation. We'll say due to COVID issues, the company is under liquidation. Even now it is under liquidation, still this 25% tax to be paid if if it was liable for that. Then any subsequent liquidation process of of a subsidiary or a holding company shall not immediately indemnify from the tax liability. Still you have to pay that tax liability, but here they have mentioned only subsidiary and holding company. What about the other companies? Suppose there's one single company who is having about 2 billion taxable income. No subsidiary, no holding companies. Now, in that type of companies are not covered with this sentence. I think it is a mistake in the bill. Right. Then, what is taxable income? What is taxable income? That is also very much important. We should know what is taxable income. That is, the taxable income is the income computed under the Inland Revenue Act for the year of assessment 2020-21 under the Inland Revenue Act. Now we have already computed these things, already filed the tax returns and finished it all. Finished. As a result, now these figures are available. It's very easy. Just apply on that taxable income. Then, now there are certain companies which are not taxing under the Inland Revenue Act. You all can remember, under the BOI law, we had some companies who are paying income tax under the BOI law. Then subsequently they stop it, but all the companies continued under the BOI. Now, then, as per the BOI agreement, after the concessionary period or tax exempt period, they have introduced a specific tax rate. Now, still, we may be paying the income tax under this with this BOI tax rates, by applying the BOI tax rates. If it is the situation, it says even that is covered. Even that is covered. That means any company paying taxes under the Inland Revenue Act or under the BOI law, both are covered with this law, with those 2 billion limitation. Then we'll see what are the exclusions given in this law. There are three exclusions given in this law in calculation of a partner's income tax. Partner's income tax. The partner's income from the partnership on which the tax has been paid by the partnership. Now, there may be one individual who is having more than 2 billion taxable income. If it is the situation, and if that particular individual is having any income from a partnership, suppose that partnership has already paid the income tax on their income, then that particular partnership share of profit need not to be included in this individual's tax computation for this purpose. Here they have used the word which the tax has been paid. The word income is missing here. It should be which the income tax has been paid. Still, this is in the bill stage. They will improve this. They will rectify these errors. Then, in the case of a group, in the group company, the group turnover, group taxable income excluding dividend income from the subsidiaries. Now, in a group, the holding companies or subholding companies are ultimate holding or subholding companies are getting dividend from these subsidiary companies. If they have got dividends, those dividends are already included into the taxable income. If it is the situation, for this purpose, that group can can remove those dividends received from the group companies. Then any company in a group having nil taxable income shall not be taken. That is obvious. I don't know why they wanted to why they have included this into the bill. Because if there's no taxable income, if the taxable income is zero, when you total up the zero with other taxable income, ultimately the value what you have given is zero. Therefore, this I don't know what made them to include this last uh, item. I think I have well explained this area.
Yes.
Uh,
Yeah. Let's quickly cover the surcharge tax payment, return filling, and accounting actions as well.
yeah, it is better to talk on those matters also, because when there's a tax liability, there should be time of payment we have already discussed. Then we have to file various records, returns. And now we'll talk about those things. Surcharge tax returns and how the tax to be treated in the treated for income tax, VAT, and accounting purposes. Now the law explains these things. In the section 3 of this law, it says every individual, partnership, and company. Because those three are the liable persons: individuals, partnerships, companies. Include companies mean companies including the subsidiaries and holdings. Chargeable with this tax. That means their total increase 2 billion taxable income. Shall file the tax return. If anybody is liable, shall file the tax return on or before 31st March 2022. The tax return to be filed on or before 31st March 2022. File with whom? Law says, yeah, this particular return to be specified by the Commissioner General, and we should file the return with the Commissioner General. Then for Surcharge Tax Act, the surcharge tax return so filed shall be treated as a self-assessment return filed under the provisions of the Inland Revenue Act. Now, under the Inland Revenue Act, we know something called something called self-assessment returns. Now, once we file a surcharge tax return with the Commissioner General in line with the law, or in line with this particular law, it is to be treated as a self-assessment return filed with the Commissioner General, as similar to self-assessment return under the Inland Revenue Act. Right. Then we will see how we can treat these things for income tax and VAT. Now we pay, now this is for a past period. Now we are paying a tax, another tax. Now, how we should consider this tax, treat this tax for the income tax and VAT purposes. It says, Section 2, subsection 7 says, surcharge tax is not an allowable expense. Surcharge tax is not an allowable expense for income tax purposes. Anyway, obviously, we have already calculated the income tax for 2021. But anyway, it says the surcharge tax is not an allowable expenditure for income tax purposes. You have to disallow that. Then, next is how it is affecting to the VAT. It says surcharge tax is not allowable as a deduction for financial VAT calculation. As you know, when we are calculating the finance VAT, only few items are can be deducted. Now, in this case, surcharge tax is also an expenditure not allowable for financial VAT calculation. Right. Next, how to account for? Now, the nice thing in this law, it explains how to account this surcharge tax. But I don't think this type of a thing is there in the income tax law. I don't know what made them to include this into the Surcharge Tax Act. It says the surcharge tax deemed to be an expense in 2021 accounts. Now, 2021 accounts already we have already finalized, audit completed, tax returns filed, and whatever the excess money we may have already declared as dividends to the shareholders, already paid the dividends. Now it says deemed to be an expense or in 2021 accounts. Now, what will happen in next year when we are preparing the 21-22 accounts? When we are preparing 21-22 accounts, now with this sentence, we may have to amend restate the comparative figures, because we have to charge it to the 2021 accounts. Now already finalized. Then when we are preparing 21-22 accounts, we may have to adjust the comparative figures column. We may have to restate by we have to charge this to the previous year. Now it is too late. I don't know why they have based this on a subsequent year. The reason may be to avoid any possible manipulations. That may be the reason. Anyway, it is too late. I think
Yeah,
I have explained this part well.
yeah. It's not at Mr. Ranavira, and I see this proposed bill is not so lengthy, and its entire administration part is connected to the Inland Revenue Act. So we'll talk briefly about the administration of the proposed bill.
Yeah, as you mentioned, this bill is a very short document, very small document, very simplified document. We are very happy because it's a simplified act. But to see, it is not so simplified. When we take the Inland Revenue Act, almost 50% of the Inland Revenue Act is covered the administration side. Almost 50%, more than little bit more than 50% covered the administration. Now, in this law, almost all administration things, other than very few specifically mentioned items, are covered with the Inland Revenue Act administration part. Therefore, Though we see this as a very simple document, it is not so. Not so. Now we will see those things. In the Revenue Act, sections which relate to the following to be applicable to surcharge tax as well. Now, under the Section 5 of this proposed bill, the Inland Revenue Act application connection they have given with relate to what? Administration, record keeping, information collection, and tax returns. Record keeping, that is accounting, information collection, and tax return. Next, assessments, appealing, and objections. Next, tax liability, payment, recovery of tax. Next, interest, penalties, and criminal proceedings. Now, for all these things, we have to refer the Inland Revenue Act. Then, at the same time, uh, we would I would like to talk about the default. If we'll default, what will happen? Defaulting of tax payment and action thereon. It is better to know about that also, because this is all these are something to do with administration. Any surcharge tax, liable individual, partnership, or a company defaults that amount is to be treated as a defaulter. Now, like in the Revenue Act, suppose somebody default the tax payment, he is treated as a defaulter. The same thing is there in this. The liable persons here are individuals, partnerships, and companies. In the case of companies, it is including subsidiaries and holdings, or incorporated or unincorporated bodies. All these are covered with this. Then those people consider whoever who defaulted, we can treat him as a defaulter. Then if somebody default or somebody not paid on the correct amount, not then what the department can do? Department should assess that particular person, but last date of assessment is 31st December 2024. On or before 31st December 2024, the assessment to be raised. Assessment to be raised. Now, in this law, most the tax administrator is the Inland Revenue Department, Commissioner General of Inland Revenue. The tax collection, we have to pay the tax to the Commissioner General. Then Commissioner General, 15th by 15th of subsequent month, Commissioner General should remit it to the consolidated fund. There are then Commissioner General should administrate this. All administration steps to be taken by Commissioner General. Right. Then Commissioner General can raise assessments only on or before 31st December 2024. Then tax assessed to a partnership can be recovered from the partnership, a partner or an agent of the partnership. Now, according to this law, this particular assessments could be raised under the name of a partnership. Even we raise an assessment under the name of the partnership, then that partnership, as well as each partner, as well as an agent of the partnership, is liable to pay or liable to that assessment, responsible for that assessment. I think I have explained that part well.
Okay. And you recently mentioned about the surcharge tax implications on group taxable income. So I think it would be beneficial for our audience if we can elaborate how to recognize a group company, holding company, and a subsidiary based on the important interpretations given in this bill.
Yeah, yeah. Uh, I'll cover that.
Yeah.
We will take the interpretations. Now in most of the laws, the interpretation of key terms are given. Now in this, the group of companies. The word group of companies is interpreted to say means a holding company and its subsidiaries. Group of companies means a holding company and its subsidiaries. Right. Then we have to see what is a holding company. We have to see what is a holding company. That is also defined in this law. At the same time, even the subsidiary company is defined in this law. First, we will see holding company's definition in this law. Holding company means a company which owns more than 50% of the shares with voting right shares of any company directly or indirectly other than a holding company incorporated outside Sri Lanka and not registered under this chapter of the Companies Act number 7 of 2007. Now this is branch office. Other than this branch office and the companies incorporated outside Sri Lanka are excluded. All other companies which are registered in Sri Lanka are covered with this. But to be a holding company, that holding company should have more than 50%, 50% owns more than 50% of the voting right of that subsidiary company. Then we'll see what is a subsidiary company. Subsidiary company means a company in which more than 50% of its shares with voting rights are owned by another company, directly or indirectly, other than a subsidiary incorporated outside Sri Lanka and not registered under this chapter of the Companies Act of a holding company incorporated outside Sri Lanka and not registered under this particular chapter. Now, they are subsidiary company, overseas registered subsidiary companies are not covered with this. Likewise, branch office, any subsidiary company registered as a branch office in Sri Lanka is also not covered. Anything other than those two, all the other companies registered in Sri Lanka are covered, but subject to this 50% voting right of that company to be held by the holding company. That is the limitation. Then when we take the company partnership and year of assessment, these key terms are defined in the Inland Revenue Act. It says for these definitions, we have to refer the Inland Revenue Act number 24 of 2017. Inland Revenue Act number 24, 2017. Out of those things, the company definition I have already covered earlier. For partnerships and year of assessment, we can refer the Inland Revenue Act number 24 of 2017. I think I have well explained that part.
Yeah, totally. And adding few points to the topic, we experience that a lot of entrepreneurs, trade unions, and employees are criticizing this bill, saying that it is not a fair tax and the employees' retirement funds are also affecting with this proposed act. So, shall we highlight such concerns as well briefly?
I, yeah, I can understand there was a disturbance. Anyway, what I think the way you asked, what I gathered, um, uh, uh, we are experiencing a lot of entrepreneurs, trade unions, and employees criticizing this bill. Lot of people are criticizing this bill, and they says it is not fair. It is not a fair tax. Therefore, now we should know why we should look into this. Why they are shouting like that? Why they are objecting those things? I have gathered certain things. There are issues. I have gathered certain issues what they are raising with that. One is they says duplication of tax because now we this 2020-21 year already we have already paid the income tax. Now, when we are paying another surcharge tax, that is a duplication of tax. The people are objecting for this duplication of tax. Now, as an example, if you take a liquor manufacturing company, already they have paid 40%. And now we have to pay another 25%, then altogether 65%. And the what is left for shareholders and for society, social welfare activities is only 35%. It is a duplication of tax. Then effects on winning of uh, foreign direct investments. Now, this when they introduce this type of taxes, when they introduce this type of taxes, uh, it is very difficult for us to promote the foreign direct investments towards investments in Sri Lanka, because the investors are not happy with this type of sudden change in tax laws in Sri Lanka. They are not happy. Therefore, this will discourage this step will discourage the foreign direct investments to Sri Lanka. Then what's left for investors by doing this? Now ultimately, now somebody is the entrepreneurs, they are spending their money and doing various investments. Investors investing their money for profits, but ultimately what is left for them? What is left for them? Because the major portion now in liquor, tobacco and all, almost 65% plus various other taxes also, and other taxes are also there. Minimum of 65% on income tax the government is going to charge. It's a huge amount. Then unfairness on charging on a past year. Now, this is a year of assessment 2021. The business, we have already completed the business and we have already declared the dividends. Whatever the leftover, we may have already declared dividends to the shareholders. With that situation, it is very unfair. Then effect to the tax principle and payment ability. Now, again, this is against the tax principles, as well as this is against the tax payment ability. Now, by now, this money may have already utilized for various other things, for development, for the various activities. Then it is not fair. Then why a high tax rate on big instead of a lower tax rate on all? Now, why we are charging another 25% on big companies instead of a lower rate? We will say to a 12.5% on every company or every entity whose income goes beyond 500 million. Excess of is 2 billion. Why we can't charge only on excess? Now we'll say, suppose there's somebody who is having 2 billion and 1 rupee, 2 billion and 1 rupee. We are charging 25%. That means leftover is only 1.5 billion. Suppose this particular person is having 1 rupee less than 2 billion. He is well off because he is getting that amount as it is. Then why based on a group taxable profit instead of individual companies? Why we are basing on group taxable profit? That is not fair. Now for all other cases we are charging on individual basis now, but only this on group basis, not fair. Then effect to employee retirement funds. Now the people are shouting because of this. Now EPF and ETF comes under the company definition. This employee provident fund and employee trust fund comes under the company definition. As it comes under the company definition, even the EPF fund, EPA employee provident fund, the employee trust fund, both are liable for this particular tax. Now, ultimately, what will happen? Now, suppose the beneficiaries are getting 10% profit share every year. After paying this to the government, that share may be 7.5% or 7%. It is not fair. Then the next is the future of liable persons. Now we have bad experience. Most of the taxes what they have introduced like this earlier, they introduced saying that it is for 1 year, but it continued for more than 1 year. And a lot of people feel that they might continue this for another couple of years. Therefore, there's a tax fear in the market. When there's a tax fear, a lot of people will avoid investing in Sri Lanka. Then next is, will it be repeated for some more years? The same answer. Sometimes it might repeat for some more years. I think that's all what I have to say, what I have to mention on this matter.
Yeah. Okay, even though that was the end of our today's topic, I would like to take few moments to talk about tax amnesty, as it's high time to go through the process. So we can see there's only about 1.5 months remaining to make a declaration for tax amnesty under the Finance Act, where I heard that a lot of rejections have been made by the Commissioner General in this regard. So why don't we touch this subject through another tax talk session in future?
Yeah, I think that's a wise proposal, because now some people, they have already declared their amnesty, and they have already got bad experience by declaring amnesty. Because now, as per the amnesty law, Inland Revenue Department can either reject it within 1 month, and lot of people declarations, the Inland Revenue Department, they have rejected. Now the risk of that is that if they'll reject it, those information are with them, no security for us. Ultimately, they can make use of those information indirectly. Therefore, there's a fear in the market, not like in earlier amnesty. This time there's a fear among the people who are willing to disclose. Therefore, as you propose, I think it is important for us to address to this amnesty law, the current situation of amnesty law, because we have only 1.5 months more. We better talk on that matter in a near future. I think that's a wise proposal.
Yeah. With that note, I think we have reached the end of today's session. If you have any queries regarding today's discussion, you can drop a comment below the video and the Text Talk team will promptly address it. Thank you, Mr. Anavira, for your time and efforts. I think your approach has sorted many doubts of the audience in relation to the latest surcharge tax. You can get in touch with Mr. Anavira through the contact details on the screen. So also don't forget to follow Ranavir Associates on Facebook and keep this YouTube channel subscribed so that you can get the latest tax updates as well. See you soon with our next live talk. Until then, bye. Stay safe.